Eric Mwathe, October 30th, 2014, with another mentorship video. Within the last hour or so, I sent you a text, talking about DSLV. I want to show you why I think it could be a candidate for a short-term holding. And this comes from the fact that the silver ETF, SLV, seems to be breaking down below the previous weekly closing high, just above 16. Seems to be a break there. Also, there's a bearish development because the weekly RSI is coming back below 30.9. Now you can see that previously when it was trading below this 30.9 level, it did have a big push lower, as you can see here. So this denotes this period here. So you can imagine what would happen here if the weekly RSI continues trading below 30.90. Now I have a couple of videos on YouTube, and you can just go search on my YouTube channel, search for 30.90. there will be a lot of explanations. If you can't find the video, let me know and I'll send you the direct link. But there's a reason why moving below 30.90 is not a good thing for any instrument. So that's one view on the weekly. Take a look at on the SLV, the silver ETF, on weekly, on a monthly chart, excuse me. So monthly chart right there, monthly, draw a straight line. You see that we are now at 3-year lows, which is bearish. And also you can see that on the MACDs, we are trading below zero. We had a crossover below zero, another bearish signal, and we could very easily break to fresh 3-year lows on this MACD. So two of the MACDs are bearish. One of them failed to hold above zero. The other one is already below zero. Both of them are below zero, and this one could very easily make a fresh 3-year low, which would add downside pressure. Now, if the SLV is looking slightly like it's going down, the best way to do this for a short-term holding period is to own DSLV, 3 times short the silver market. And you can see that the entry point here is when it moved above, on an ideal basis, when it moved above 70.85, which happens to be this prior recent weekly closing high. So as long as it's holding above 70.85, it should be breaking out. I like the fact that the RSI is now back above 69.10. Again, these numbers are explained on YouTube. If you want me to send you the direct link to this explanation why I use this number, or 30.90, then I can do that, but they're on YouTube. So the fact that it's reclaiming 69.10 is an indication of momentum and strength. The key is you'd like it to hold above 70.85 to know that it is healthy and a healthy breakout. So that's why I sent you that buy alert for DSLV via text. Also, another reason is I see that the ETF short, the miners, the DSLV, is well above the previous weekly closing high. So this one, in fact, I was just about to send you an alert yesterday, but I kind of held off, so my bad. I was thinking when it moved here just above $30 and change that it was breaking out. Was just about to alert you, but I wasn't sure. But you can see that today it's up. The DUST is up 11%. So I believe if both of them are going to do well, then the DSLV could also join this one in having a good gain. So far for the month, DUST is up 25%, and we see that the DSLV is only up 11%, 12%. So maybe it might play catch up. If it moves back below 70.85, then that's your cue that it is not going to work out, and you're better off just getting stopped out. So that's the idea. Eric Mwathe, good luck, peace, and blessings. Woo!